Hello, I'm Leo Wang, and today we're diving into the critical signals shaping our global markets. The landscape is fraught with uncertainty, driven by significant political and economic shifts that demand our attention. First, a major development from the U.S. Federal Reserve. Governor Adriana Kugler has announced an early resignation, stepping down months before her term was scheduled to end. This unexpected departure creates a pivotal vacancy on the Fed's board, opening the door for a new appointment by the current administration. This introduces a significant element of unpredictability into future monetary policy, especially given the administration's known preference for lower interest rates and its critical stance on the Fed's current leadership. The financial sector and bond markets are now on high alert, as any change in the Fed's direction has far-reaching consequences for the entire economy. This political uncertainty is amplified on the global stage. New geopolitical friction is emerging, with a top U.S. official accusing India of indirectly financing Russia's war efforts by purchasing Russian oil. This accusation carries the implicit threat of trade penalties, which could severely disrupt relations between the two economic powers. Companies with significant operations or trade links with India are now facing a new layer of risk, and the energy sector is watching these developments closely. These trade tensions are not just talk, they are causing tangible shifts in the financial world. Market analysis shows that some European companies are actively diversifying their banking relationships, moving business away from Wall Street's giants. This trend, spurred by concerns over tariffs and trade instability, represents a potential loss of market share for major U.S. banks and a corresponding opportunity for their European competitors. In fact, the European banking sector is showing remarkable strength. Shares in Europe's largest banks have recently climbed to their highest levels since the 2008 global financial crisis. This surge is fueled by a combination of rising long-term interest rates, which boost bank earnings and growing economic optimism across the continent. It's a clear sign of improving financial health and investor confidence in the region. Finally, turning to corporate news, we see a significant move from one of the world's most watched investors. Berkshire Hathaway has reported a massive $3.8 billion write-down on its stake in Kraft Heinz. This impairment reflects the ongoing struggles within the consumer staples giant and serves as a stark reminder of the pressures facing even the most established companies in the current economic climate. In conclusion, the market sentiment is decidedly uncertain. The combination of a leadership shakeup at the Fed, escalating trade disputes, and a shifting balance of power in global banking creates a complex, risk-filled environment. The key factors to watch will be the next Fed appointment and any further developments in international trade relations.